Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, more and more the data is telling us we need to be very protective of our portfolios here and as we go forward through the month of July into August. So we're going to talk about that, show some more charts, and also show you what we're doing intraday, intra-week on our trades. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
You know, Bob, I know we look at a lot of data that is just not agreeing with the market move, a lot of divergences, and yet you're able to find even more charts that agree with the fact that it just doesn't seem like the market is really reflecting reality here.
I just keep scaring myself. It's just, yeah, it's just amazing. But hey, before we get into that, Phil, would you throw up our charts? I just want to let people know. I know sometimes people troll the troll, but people, hear us being very macro bearish. And I'll let you speak to you on the crypto side in a second. But we're probably 90% long, and we find long trades all the time, even in the midst of this. So I'm just not going to bore you with all the details here. But if you see the shaded in green, those trades won money for us. The trades in white are trades that lost money. You can see on the left, on the right side there in the middle, what percentage. But overall, our trades since the beginning of 2020, and it's been consistent all the way through, we have about a 2/3 win rate, which is actually higher than what people say is very good. And we have a average gain per trade of 0.84%. So you can determine whether or not you want a little bit lesser win rate and let other winners run. But we're only in these trades on average of 3 days, and it gives you an 87% annualized gain on the trades that we're in. So just want to let people know that we just find long trades as much as possible. Today we're talking to you on Thursday, and the market had a pretty good swoon down. So our hedges are paying us, and just want to let you guys know on that. On the crypto side, Phil, you're mostly long on crypto, but you trade Bitcoin on the short side too. Is that correct?
Yeah, so we've kind of been staying away from the alts because that, I like to play alts when the alt BTC, in general, that market, the alt BTC valuations are bullish, and it just hasn't been the case, right? We've been falling off a cliff. So we've been staying away from that, just kind of focusing on mostly Bitcoin. You could do Ethereum for that matter, but tactically trying to just be in and out for the shorter term trades. I do think though that if we're right about the shorter term stuff and potentially this gap that we got today down in the equity markets holds, and we have this kind of island top now in this SPX, and we start to see this move down that we think we're due for, and I think Bitcoin's going to follow suit. And I could be even exact in saying that I think that high we got this morning, just above the new yearly high there that we got this morning, may hold and come back down. If we're going to go higher, let's say to 32K and beyond, because if you recall in 2019, we retraced from low to high 50%, which would mean we'd go to like 40 some odd thousand, and then we would see like a high there. Otherwise, if this market has topped out for the time being, then we shouldn't really see much more than this, and we'll come back down. So this area that we've kind of butted our head against as far as Bitcoin, and I'm just talking kind of here in an intermediate sense, is that's a key resistance level. If you look on the chart going into the weekly time frame, it's big resistance because we had a big base there, and then the market finally broke down below that. So we're testing it from below, and we may not get it on the first go. So we could easily pull back to 25K or lower. But if we do pull back, let's say, and then we get kind of a relief rally in August, the market might try to come back up here and test it again. So we'll have to see. But I do do think though that, many people are calling for all-time highs later this year, and I'm not in that camp. I think if anything, I think we're looking at macro issues with recession and things like that ultimately drag us lower. But this whole thing that we've been looking at, Bob, kind of segueing back into the equity side of things, is I think that we are facing a recession. There's too many things pointing to a recession, and that it's just a matter of time before that kind of materializes. And I think that kind of goes to what we're seeing now in our next set of charts here.
Yeah. So, and this is why, it's funny because you talked about this a couple months ago. When the Fed decided to rescue the banks, they said none of this will leak into the equity markets, and they absolutely lied to us.
Right.
It all leaked into the equity markets, and this is what we're seeing is that look at the Nasdaq versus the Treasuries. They are always hand in glove, and then we have this huge, basically crocodile mouth here opening, and that'll snap shut. And so that's one reason why we're scared. Check out this next chart, Phil.
Yeah, this would be the EPS versus stock prices.
Yeah, now this is why this is where I hate, because I'm a former M&A guy. You sit there and you're like, who in their right mind is overpaying for diminishing cash flows? Right.
Yeah.
And that's what we're seeing here. Once again, huge divergence.
Yes.
And it's all being done on the derivative side, Phil. This is what scares me the most. I used to think, hey, maybe we'll get a 2%, 3% pullback. Now I'm thinking, are they going to 88% down this whole move up from October? Right. And it may come fast. Look how fast the VIX gave basically SVXY this morning gave back 3 weeks worth of gains in 3 hours.
Right.
That's how fast these down moves occur.
Right.
And you're not going to get a chance. And what's even worse is if we get a down move with a pullback higher, the next move down, people are going to think there's a dip, and that's when they're going to start catching people. But I'm not done yet. Look at this chart.
Yeah, this next chart is the excess savings. Throw this up here on the screen. Yeah, this is, you always say, oh, retail's going to buy the dip. Well, with what money?
I mean, this is absolutely scary. And this is the part that actually scares me, because this is what people go broke. Okay. How many people are living hand to mouth and just looking for that next job, job? I'll give you an interesting thing. So for months and months and months, I've been trying to get a masonry contractor at my house, a solar contractor at my house, and a roofing contractor at my house. Well, guess what? All in 1 week, they all showed up. And I called them, and all of them were ready the next day. When does that happen, Phil? You were in construction for decades.
That hasn't been happening. That's the thing. Everyone's been just busier than they can see straight with, and now all of a sudden, I think you said in your area, wasn't it after Easter things started to roll off? Yeah,
the guys that sell the materials said it's been a ghost town. In fact, we've never had a thing where they were closed Saturday, Sunday, Monday, Tuesday for 4th of July holiday. Okay, and you know what I mean? In the materials business, the guys are always open. You know what I mean? Big sales. They're just saying, the guy I was talking to, he said, hey, it's a ghost town here. We're just going to leave early. The day I was picking up my material. I mean, first of all, they admitted it to me. I'm like, maybe I didn't negotiate my material hard enough. But yeah, so I worry about these people because a lot of contractors, with the subs, they live hand to mouth.
A lot of them do. And, the other thing with that is that I know we have a couple graphs. Maybe we'll cover this on tomorrow's video, is also the retail sector. As far as retail data is really going downhill now. If you're in any investments in the retail sector, I would take a long look at that. I don't think the numbers are going to be very good for the next 2 quarters.
Yeah, and I think we'll talk about China. And sorry, one of my trades is
just restart it when it's done.
Yeah, Phil, I think we should talk about China and AI, and also AI and European regulation, and AI and who owns the IP. You want to see AI fall from grace here in a heartbeat. Wait till some of this stuff starts showing up too. So I think we should talk about that in the coming days too, because that is where everybody poured their money into.
Yes.
And I think the bloom's going to come off that rose faster than what people think.
Yeah, it's kind of odd because I look at that as like another .com bust. Essentially, this is going to be .com bust version 2. It's just very strange because we had a market top. See, the .com bust came with a market top. This is coming at a lower high. Like we had this echo bubble almost of this AI.com boom, right? Before going through 2021, it was like the everything bubble, right? Well, we weren't really talking about AI. It was like, the Airbnbs and all these meme stocks and everything like that. Now it's just the AI bubble popping. So it's a very weird market in that sense because it was like this afterwards bubble that happened after the bubble. And I think it just goes to show you that we just have way too much excess equity that was made up out of thin air coming out of COVID. And that's why this excess savings chart is important, because there was a lot of, retail's being more of a factor in these markets. They've even upended some hedge funds, as you saw with, GameStop and all that stuff, actually out trading hedge funds. When does that ever happen? Never happen. So retail crowd's getting smarter and they're getting more powerful, but their resources are definitely going to the wayside. And most retail didn't fare well after the 2021 bull market. Most retail does well in a broad bull market. And I think lessons were learned, especially on the hedge fund side of things, that you just don't want to fade a strong bull rally early. But as things change, as liquidity was taken away from the system, and that's exactly what happened, the Fed turned off the spigot and the markets followed suit. Then the weird thing here is just that you've had like this echo bubble of excess liquidity, and it's weird because we had another squeeze. This is like the end of a move squeeze, and the reality is the fuel that moves these markets has been going south for 2 weeks, and now we're, like you said, with the jaws, we're going to get that snap shut effect pretty soon, I would imagine.
Yeah, and so let's talk about, maybe we'll talk about that Monday, because there's a lot of moving parts to the AI machine learning thing that I think people just think it's like a snap your fingers and people can spend all this kind of money, and it's not showing up. Right. And so let's definitely talk about that next week for sure. And guys, I'm just telling you that, Phil and I want to be positive, but man, when you look at data like this, we're basically doing you a journalistic disservice if we tell you that everything's fine, and it's not.
Right. Yep. All right, guys. Well, that's going to do it. Let us know your thoughts on today's video below. I'd love to hear from you, and we will see you on the next one. Please hit like and subscribe and smash that notification bell and set it to all if you can. That really helps out the channel as well. Check out our specials on our website, or check out the newsletter if you want a day-to-day game plan on what's going on in the market for your day trading needs. And we'll see you on the next one. Take care, guys. Bye-bye.
Trade Genius.